Did you know you could morally, legally, and ethically get your monthly mortgage payment lowered? That's right. I'm just finding out that most lenders, mortgage companies, and banks offer a program that allow you to step in and change the monthly payment based on what you owe. So today's video, we're going to go over how this all works, how I'm looking at doing it for my loans, and further, you can maybe get out there and apply it to a loan that you have. All right, let's get into this. It's my birthday, Roundup family. Greetings, it's Kris Haskins coming to you again. My mission and ministry is to raise your financial literacy through real estate investing and entrepreneurship. I'm turning 48 today. I'm proud, happy. 48 years old, I've got 3 kids, happily married, and I want to change the image of what men that look like me come out through the media. Gone are the days of drinking, drugging, sexing, and partying and all that craziness. We want to have an image of success, health, and family love. So that's why you're here on the Roundup channel. So being that it's my birthday, I'm putting a bunch of links in the video description that will help you, and you can actually download my negotiating Bible for free. Thank you so much for making my channel one of the #1 channels on YouTube for real estate investing and entrepreneurship. So let's get into this stuff here. I get excited when I talk about finances, right? Because I don't have to make this stuff up. This is what I actually do. I get to share with you my life. And since I've been doing real estate from 2004, I'm just finding out about these programs. So let me tell you how this thing popped up on me, right? So, if you follow my channel, I've just built my house, being transparent. I love being transparent. I don't have to make up anything to be this guy that I'm not. So me and my wife borrowed $350,000 to build this property. We use something called a construction to permanent loan, a construction to perm loan. What does that mean? That means for the first year, it's in the construction phase of the loan. So all I do is pay interest only. And then after the first 12 months, it converts to a permanent loan, which means it's amortized. It's going to be amortized for the full 30 years. All right, so you got that. First year's interest only while we're building it. Boom, month 13 changes into a fully amortized loan. And it's going to be a 30-year amortization. So this is for all my Roundup homies that have a 30-year am on their property or are looking to get the 30-year am. So what happened was I bought that $350 and we finished the house. I'm like, damn, I owe $350. So you know me, I'm all about getting out of debt. Not to say that I don't use debt, but I don't want to have long-term debt that my back has to pay for 30 years. So we finished the house maybe a month, 8 or 9, whatever it was. So I started paying extra principal on this thing. I'm like, man, I don't want to be in debt. If I borrow $350, that means I'm paying back $700 almost, right? So I know how this thing works. If you don't know, let me tell you right now, amortization and these loans are the biggest financial engine that this country has. All right, so you need to get into it if you're not into it. Don't be on the side that's always paying some interest. Be on the side that's collecting some interest, right? So I want to get out of this debt. So I started paying extra principal, boom, boom, boom. I found out that I had paid up to almost $50,000 on extra principal almost before the loan had converted to permanent. All right, so I borrowed the $350 to build the property, so I started paying it back. And then month 13, I was like, I had paid back maybe like 40 grand. So I only owed 310. So I emailed the lender. I'm like, look, I paid back a lot of my principal. Can y'all just, make my monthly payment based on what I owe now, which was 310? And they were like, nah, that's not how it works. It didn't necessarily work like that. I thought since I was still in the interest only phase of my loan, that I could pay it back and they would just calculate my monthly payment based on what I owed. Nah, they weren't gonna do that. But I found out something. It's crazy. Been doing real estate since 2004. Never heard of this term called loan recasting. Loan recasting. Well, what is that, Kris? I have no idea what that is. Well, I'm gonna tell you. Well, let me rewind before I get to that. This is the email I got from my lender. So I sent them an email. I'm like, I only owe $310. Can you make my mortgage payment based on $310,000? So she goes, well, yes. Well, you have to recast the loan to lower the payment. There's a $250 processing fee to do that. This is my brain is like, I'm like, okay, What is recasting? I don't even know what loan recasting is. This is the first time I'm hearing about this. You want to make sure you have paid down whatever amount of principal you want to pay down for the new payment recalculation. In this case, I believe you will need to pay your October payment that is currently due. We require up to 30 days when we're doing a payment recast. I don't think it would take that long, but we can't rush them. Once we have the updated principal amount, I will create the change in terms agreement document, recalculating the principal and interest, that's what P&I stands for, portion of your payment, principal and interest. It should lower it by an estimated, at this time, roughly $200. Once we have the principal balance to work from and a confirmation from you to proceed, I will send you the change in terms agreement and instructions including the invoice for the $250 processing fee. What? How? Who in the world? Where did this recasting come from? Why didn't I hear about this back in 2004, 5, 6 when I first got in the game, right? So you are here, thank God, to raise your financial literacy and put money in your pocket. That's why I love talking to you. So you're telling me I got to pay $250 and I can change and lower my monthly payment? But then I had to go deeper. Like, what is a recast? I have no idea. So I did the research. I just Googled it. Did the research. You can Google it too. Right here at Rocket Mortgage, it says right here, your lender will once you pay a lump sum payment, which I already have, your lender will then re-amortize your mortgage with new lower balance. Your interest rate and terms remain the same, but you can lower your monthly payments because your principal went down. So I can lower my payment based on what? Man, this has been an eye-opener for me. So what I did, you know me, I started doing my research, started digging. So I borrowed $350. So this is what my current monthly payment looks like. We borrowed $350,000. My interest rate is 5.25% on 30 years. So my monthly payment, P&I, principal and interest, is $1,933, right? So that's where I am now, okay? But I need y'all to understand how this works. This is a 30-year AM we're talking about. Now, if I were to recast my loan based on $300,000, let's look at what it would be. $300,000. So my new payment, the same interest rate, 5.25%, 30-year AM, monthly payment would be $1,656. That's a huge difference, right? So I have to make the decision. Do I want to change my payment? Do I want to keep making? This is the big thing that we have to understand when we recast our loans, right? On a 30-year amortization, and all the amortization means is you're paying back what you borrowed in a monthly installments. That's all, okay? So this is generally speaking how a 30-year amortization looks like. You have to understand this. So in year one, the yellow here is the interest you're paying. So let's say on my loan, my interest is $1,500 and my principal is going to be $450 or whatever. So in year one, your interest is high and your principal, which is what we actually borrow, is super low. Year one, right? So year 2, 3, 4, 5, 6, what happens is throughout the time that you pay your monthly payment, the amount of your monthly payment, that $1,900 that I pay, the amount that goes towards interest goes down, and then the amount that goes towards principal goes up. So as opposed to at the beginning, let's say $1,500 is interest and $450 is principal. So every time I make a payment, boom, 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 the amount that goes towards principal gets higher and higher. And at the end, the entire $1,900 will be all principal, and it will be just a few dollars going towards interest. So right around year 15, 16, 17 is where it flops, all right? Where you can actually see on the AM table where it goes from paying more principal to more interest. More interest to more principal. And this takes a little time to get this through your minds. I know it took me to, but I will tell you the way to get out of debt is live with your amortization tables. I have all of my amortized loans printed out right in my file cabinet. I can pull them out and see exactly where I am now. So it's being that I had paid $40,000 to $50,000 on my loan already. I am already at year 9. I'm already right here. So do I want to reconsider this? So what happens when you recast your loan, round up homies? When you recast, you start over back at year 1. So for me, I'm at year 9 already. If I recast this loan that I have, I'm rewinding time. I'm starting off at year one because I've already paid so much principal in. So you have to make a decision for you. I don't know. Is this something that's going to be good for you? Do you have to worry about getting out of debt, or do you have to worry about cash flow? So for me in my life right now, I want to get out of debt. I want to be done with debt. If you don't know this, debt is like high blood pressure. Debt will take you up out of here. I look at people's income statements when they come to my coaching all the time. I want to know where your money's going. New car, credit card debt, health insurance, I'm usually not life insurance, car insurance. They got gap insurance. You've got credit card payments that are through the yin yang. You got a mortgage payment that is high. So this debt, y'all, is killing us silently. That's why I need you to understand, if you recast your loan, if you start back here, you still need to make sure, you got to make sure here, y'all, here's the kicker. You still make extra principal payments so you can speed up the time that you pay this thing off. You see, interest goes down, down, down. Year 20, 21, 22, 23, you're paying very little interest. But back here, you're paying mostly interest, so it takes longer to pay off that debt. So when you get down here, 1 year, you might pay off, I don't know, $7, $8, $9, $10,000 worth of principal, which means your debt is going down. But right here in 1 year, you might only pay $2,000, $3,000 in principal to pay off that debt. So keep this stuff in mind, my roundup homies, as you are going through life, trying to figure it out. Because I'm still trying to figure it out. I love learning new things. My aunt sent me an email the other day. She says, Kris, are you in a fork in the road trying to figure out which way to go? I'm like, not really. I want to just learn new things, meet new people, and have new perspectives on life. And this is how we do it, by asking questions. I would have never known what a loan recast was, and highly likely you might not even know how to recast a loan until right now today. I never heard of this stuff. But I am researching that unfortunately, according to Rocket Mortgage, FHA, VA, and USDA loans are not eligible for this type of program. So if this is something that works for you, call your mortgage company, call your lender, call your bank and see, hey, do you guys offer loan recasting? Because you might be like me, have no idea what this means, all right? So listen, if you've learned anything and you feel that this is providing value to you, make sure you subscribe to the channel, okay? And further, share this information so we can get this word out to our community, because I feel like I'm pretty knowledgeable when it comes to real estate and investing. But I'm like, how come me? I don't know what this is. I think we can all learn a little something. We're all able to learn and grow. That's why I don't act like I know it all. I can learn from you just like you can learn from me. Like this content, share with somebody else, y'all. And I'll see you on the next video. Thank you so much for your happy birthday wishes. Much love to you and your family during this holiday time, Roundup family. Peace.